Investing in EV stocks isn't just about pretty charts and soaring sales, because behind BYD's impressive 40% annual growth lies a mountain of unpaid IOUs worth tens of billions of dollars. Its short-term liquidity? Tight. Its debts? Huge. Suppliers? Getting frustrated. But its stock price? Surging. And investors don't want to miss out. So today, let's dig in and see. Is BYD still a solid investment, or is it hiding a financial time bomb on its balance sheet? Liquidity and debt, a giant struggling with its own weight. Let's start with the biggest red flag, debt. BYD's current ratio is only around 0.75 to 0.81, which means, in plain English, it doesn't have enough current assets to cover its short-term liabilities. So how does it manage? Through something called supply chain financing, basically delaying payments to suppliers instead of taking out loans. Right now, BYD owes nearly $54 billion USD in commercial payables, and that doesn't even include bank debt. At first glance, it seemed smart, no need to borrow from banks. But now, suppliers are complaining. Some have been waiting 6 to 8 months to get paid. Here's the twist. Starting June 1st, 2025, China passed a new law requiring companies to pay suppliers within 60 days. If BYD complies, it could relieve pressure and restore investor confidence. But can they really pay up? Global expansion. BYD is going all in. Despite liquidity concerns, BYD is aggressively expanding worldwide. In the latest year, it sold 4.27 million new energy vehicles, NEVs, up 41%. And forecasts show that by 2025-26, sales could reach 5.5 to 6.5 million units. Where are they setting up new plants? Thailand, production already started. Indonesia, Brazil, Turkey, construction in progress. Hungary, delayed until 2026. Germany and Mexico, under evaluation. Why? To avoid import tariffs. Europe may slap 17% tariffs on Chinese-made EVs. So, BYD's strategy is simple. Build where you sell. They're also penetrating the European market using PHIVs and rapidly scaling up their dealer network, over 150 dealers so far. Core strength, battery cost advantage, and full vertical integration. Here's what sets BYD apart. They don't rely on outside suppliers for their EV tech. Through its subsidiary FinDreams, BYD produces batteries, motors, ANADS systems, powertrains, all in-house. And guess what? Their battery production cost is 10 to 15% lower than competitors. So, even when BYD sells vehicles in Europe at a higher price, customers still buy, because they're getting more features for the price. Technical analysis. Bullish momentum, but overheated. For short-term traders, here's what the technical indicators say. RSI at 84.5. That's deep into overbought territory. MACD is positive at plus 1.42. 50-day EMA is still above current price. 200-day SMA remains a strong long-term support. However, trading volume is falling, even as price continues to rise. That's a classic divergence, which could signal a short-term pullback ahead. Key levels to watch. Support, $93-$95. Resistance, $100 to $101. And then $120, 52-week high. External risks, price war, new laws, and ESG concerns. Let's not forget, China's EV market right now is brutally competitive. BYD is selling the Seagull EV for just $7,770 USD. Margins are shrinking fast just to stay ahead in the price war. Plus, there are other concerns. ESG red flags, reports of worker injuries in BYD's Brazil plant, new supplier payment laws in China, EU and US tariffs looming by year-end. If BYD fails to scale overseas production quickly or stumbles in managing ESG reputation, profits could take a serious hit. Investment strategy. Is it still worth buying? So, should you invest in BYD right now? Here's how I'd break it down. Investor type, entry point, strategy, key conditions. Short-term traders, enter on pullback with tight stop loss. Look for rising volume. Mid-term investors, Buy if supply chain compliance improves. Wait for signs of cash flow stability. Long-term holders accumulate during bad news, focus on fundamentals, expansion plus battery edge. BYD still has solid long-term potential, but it's not without short-term volatility. BYD isn't just another EV stock. It's a test case for whether a Chinese industrial giant can grow globally without drowning in its own debt. If BYD can meet China's new 60-day payment rule, keep expanding globally, and clean up its ESG reputation, this could be the most powerful EV play of the decade. If you enjoyed this deep dive, don't forget to like, subscribe, and let me know in the comments, is BYD a buy or a bubble? See you in the next video.